India has unveiled its budget for the coming financial year, taking bold steps to boost spending on healthcare, infrastructure and to support the troubled banking sector. Business lenders and investors were largely upbeat following the presentation by the finance minister. There is hope the spending plans could help spur economic growth and employment after the country was plunged into recession due to COVID-19. Rebecca Bundan has more.
Expectations were high for the budget for the financial year beginning in April, as India's economy has been battered by the pandemic and one of the world's strictest nationwide lockdowns last year. Although the economy has been showing signs of picking up as curbs have eased and the vaccine has been rolled out, the consensus is that it still needs a lot of support. Among the steps announced by the government were a doubling of spend on healthcare in the coming financial year to more than $30 billion. The sector was facing challenges before the pandemic, as well as plans for a new federal healthcare scheme. The budget, presented by the Finance Minister Nirmala Sitharaman, allocated 200 billion rupees to recapitalise state-run banks burdened with bad loans, as well as plans to set up a bad bank to manage non-performing assets. There was also a push on infrastructure spend and financial measures to support the agriculture sector amid ongoing protests by farmers. Indian stock markets surged and businesses are hopeful that the budget's plans can help drive long-term growth and create much-needed jobs if implemented effectively.
Clearly, it's a very bold budget, especially keeping in view the background impact of the pandemic and the huge fiscal deficit which the government carried. Government has made a very bold policy announcements that we will go ahead with the capital expenditure and we will not increase the tax rates. So I think these two policy announcements in itself provide a big impetus.
The government is hoping to partly finance measures through privatisation and stake sales of state-owned assets, but its plans will come at a high cost. The finance minister said that the fiscal deficit is expected to balloon to a much higher than expected 9.5% of GDP in the current financial year, compared to a target of 3.5%, and it's projected 6.8% for the next financial year. Rebecca Bundan, CNA, Mumbai.